Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in this week and listening to the show. We have the show on a bunch of different radio stations in 3 different areas. Matter of fact, one of our affiliates down in Albuquerque, we have contacted the Association of Realtors there to try to get on a every week, every other week, realtor to talk about what's going on in the real estate market in Albuquerque, which is, again, another place in America where it is on fire. We're also up in the Las Vegas market. That real estate market, too, is very much busy, and I would say busier than any place else, but every place is busy. So, you know, if you go to the Inland Empire, where another one of our affiliates is, into San Bernardino Riverside, they, too, are doing, you know, just gangbusters out there. The median price of houses out there is well over $500,000. So if you're a first-time home buyer, it's tough to find a place in that area. They do exist, but you really got to ferret them out. We're also up in the Tahoe area, and other than the fires and some of the other natural disasters that occur in California, yes, that too is doing very, very well. A lot of the flight from San Francisco and Sacramento areas have come up into that area, and then, you know, whether you're in Nevada side or the California side, been very, very busy. If you want to see us, you can go to YouTube. Go to Jeff Barton, the Mortgage Voice. This show is recorded, and we do have myself as well as a number of guests come on, and the video portion of it. If you do go to YouTube, click on that you like the show, or that you want to see the show, or you want to join the club, because it helps other people find the information. The information that we give is timely, and it is also timeless, meaning that some of the information is pertaining to what the rates are that day. The other of the information is about how do you qualify for a particular type of loan, or the interviews that we give are people who come on the show and talk about their expertise in either giving loans or helping borrowers, and we'll do the same thing today on today's show. We're also on Big 8 Podcasts. The podcasts, Daryl, do you have a list of those podcasts for our listeners?
Yes, Jeff, I
Excellent.
certainly do. It's Apple Podcast, Google Music Play, Spotify, Spreaker, Stitcher, iHeartMedia, Radio.com, and YouTube.
Thank you very much. So let's get right to what is the most important thing, top of the show. We'd like to get into some news. Talk about rates. Now, rates themselves vary from market to market slightly, but the general overall 30-year fixed rate boilerplate loan, what is the rate for that today? Is it 2.82? Now, these rates that we give out, we derive from a couple of different sources and average them out. So in your particular area, maybe a little less, maybe a little more, but 2.82, 30-year fixed, that is a great rate. It really is. And of course, that particular rate may not be available for you as a borrower because either, you know, you don't have enough involved in the deal. Like they like to see skin in the game, what they say, 20, 30% for some loans. But if you've got excellent credit, what is excellent credit? About 750 FICO score. FICO score has been reaffirmed as the credit risk qualifier for most loans this year. We're going to see some changes on that upcoming. But for right now, Fair Isaac, which is what they call FICO scores, Experian, TransUnion, and Equifax, those are the 3 bureaus. And they usually take the middle score of the 3. They throw out the highest and lowest, come up with the middle score, and that's your, you know, credit profile. But if you have excellent credit and you've got maybe 10, 15% down, you're going to get the best rate. Anything else, you're going to probably pay a little bit more. But again, at 2.82 for a 30-year fixed, that's pretty good, historically speaking. Now, I know if you're a young person and you've been used to rates below 4% since you've been in the home buying business or the home buying need, you're going to see this rate is not all that great. But when you think about it, would you lend money out to somebody at 2.82%? How about $10 to your brother, $50 to your cousin, maybe your college roommate? I don't think so. Not at those rates. You're not going to make any money. Anyway, the 15 years at 2.38. The FHA loan is at 2.38, and 5/1 ARM is at 2.52, and the jumbo is at 3.22. All of these excellent rates demonstrate that lending on homes is great. Now, through the pandemic, we've seen the housing market really carry the economy. And I think for a large measure, most people who have refinanced, and this year has been the greatest year for refinance almost ever. We have about $3.2 trillion in loans that we've done this year, and about $2.5 trillion of that, maybe a little less, is in refinances. And as a result, there's plenty of money, and people have lowered the bills that they pay. Now, we have a couple of things as well in that. So let's get to a couple of these news-related items. Okay, the moratoriums. If you're in forbearance right now, forbearance, of course, is the if you lost your job because of COVID, right? The government said you don't have to pay your mortgage, and they keep extending out the amount of time that you don't have to pay. They had 6 months, then they extended it again. Well, we've just got a third extension that I remember. We're going to go, instead of December 31st, the extensions are over, to January 31st. So you got an extra 30 days. And I don't know if the new incoming administration, and by the way, that seems to finally be settled down, and Janet Yellen will be the Treasury Secretary, which is a good thing. She, of course, has tremendous experience in the Fed. She was the Fed chairman before Powell. And she, before that, was one of the Fed governors. And before that, she's been in finance in the government realm for ages. So we're going to find a strong relationship between the Fed and the Treasury, which is really what we need to keep the accommodative aspect of the Fed minutes, the Federal Open Market Committee meeting, saying that they will accommodate or do what they can in order to make sure that the economy doesn't suffer as a result of COVID shutting down businesses. So in the moratoriums that have been extended, you're in forbearance, you lost your job, you haven't been able to find a new job, but you still have bills to pay every month. Well, you now get another 30 days off of what was just initially, 3 months, 5 months, 6 months, and now we're going to go almost to a year. It's probably going to be, well, if we started March 15th and we go to January 31st, well, that's almost 10 and a half months worth of forbearance, which is a lot. Now, renters, what's going to happen with them? That's going to be a county by county, state by state issue. And I believe in certain counties that we have the show in, some are extending and some aren't. And that's an issue for many people who do not have their jobs back, who are paying rent and are being asked to, get out, vacate, being evicted, all those things, bad. So what's going to happen? We may see a federal holiday on that. I'm not quite sure. The conforming loan limits, these are the loan limits that loans purchased by Fannie Mae and Freddie Mac, they've gone up, and they've gone up to $538,000 for a conventional 30-year loan bought by Freddie or Fannie. This is a good thing. Went up by about $25,000. Now, as we all know, home prices have also gone up. So in order to keep pace, and the way they figure this is they take the median average of what homes are selling for, and that becomes the new conforming limit. Now, it can go down. Like in a recession, we will see absolutely the drop, maybe even more than the median home price. But it's within a percentage of that median home price, and therefore this year it went up by $25,000. There's the high cost areas. In our listening area, for instance, we've got a couple of high-cost areas. I would say the San Bernardino Riverside area, some aspects of Albuquerque, and certainly up in Las Vegas, some areas too. So that loan limit is $822,000. So if you're in a high area, right, that means that those loan limits are also increased. And these will be loans that will be purchased by Fannie and Freddie, but you have to be in a designated high-cost area. And that's what that is. Okay, a couple things. UWM, United Wholesale, is already doing the limits, and United Wholesale is going public. So these are two things to understand about what's going on in the mortgage market. A lot of news, a lot more news to cover anyway. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in each and every week. If you do want to hear us, we can also be heard on the Big 8 podcasts, and those Big 8 podcasts. Daryl, do you have a list of those just quickly?
Yes, I do, Jeff. It's Apple Podcast, Google Music Play, Spotify, Spreaker, Stitcher, iHeartMedia, Radio.com, and YouTube.
Okay, excellent. And if you do go to one of those sources, click on that you like it or that you want more information. Reason is that the more people watch and listen, the more people get the information. This kind of information is not all that accessible to people who are busy and trying to keep their lives together during COVID. It's not been easy. I really understand it. If you want to see the show, go to YouTube, Jeff Barton, The Mortgage Voice. That's my YouTube channel. On the radio, we're in 5 stations, 3 different states, and everywhere from Albuquerque to Las Vegas, Nevada, in the Inland Empire, in Southern California, as well as up in the Tahoe area. We bring guests to the show each and every week that bring perspective as well as information. Long-time title person who has been on the show before, Sharon Roos, joins us from Lawyers Title. Sharon, how are you?
I'm good, thank you.
Excellent. Okay. Tell us about the title business right now. How busy are you in title?
We are swamped.
Yep.
Lots of refis going on, as you know.
When
I mean, it's incredible how many people are refinancing with the low interest rate.
Yeah. Does this remind you of back, I guess, 2003, 4, and 5, when it was extremely busy at that time, or is it even busier now?
No, I think you could equate it to the same as then. Although I think our interest rates are better now than they were then. So yeah, I think it's much more busy now. In a different way, because I think we had. I think we didn't have as many refis at that time.
Right. I think I agree with you on that. I've never seen it this busy. I wanted to ask you a couple of things about the market in general. We have a couple of large mortgage companies going public, and do you see that as a good thing or a bad thing for the market, or does it even matter? Like United Wholesale or Rocket Mortgage,
I don't know. I really don't know. I think you'd have more perspective on that as far as going public. I guess we're going to have to see that one play out.
Right. The reason I ask is because anything that affects a lender's ability to get a loan, and I only say that it might affect some lenders' ability to get a loan, like it would with shareholder interference in Bank of America or Chase. It will now with the biggest mortgage lenders in the country. The top 2 lenders are going public. So I just didn't know if it was going to limit choice based on investor need rather than customer need. And I always look at the mortgage community. Yeah.
I mean, if you've got shareholders deciding whether somebody can get a loan or not, that may be a bad thing.
Yeah. I agree completely.
They may be less inclined to want to lend.
Right. Let's say there's a recession or a downturn of some sorts when liquidity is needed in the housing market. They may, as a result of trying to keep shareholder price up, withhold funds from certain types of loans. And that's never good.
Yes.
Never.
Yes, they may be more conservative.
Right. Yeah, and I think that's the problem I see. And because United Wholesale and Rocket Mortgage, I mean, they probably control close to 50% of the mortgages in the market already.
Mhm. Yeah, that could be a big problem. I didn't think about it, but yeah, when you look at it that way, as far as shareholders, they want to protect their own interests.
Right. Exactly, and that may not be in the best interest of either the economy, the country, or the borrower. That's for sure. Um,
Yeah.
let's shifting gears just a little bit. Tell us something about lawyer's title and how you are competitive in the marketplace here in Southern California.
Well, I think if you look at our rates, our rates are probably the lowest around as far as refinancing. Our rates are super low. So
Give us
that makes it easy for you to do a refi for next to nothing.
Give us an example. I mean, I don't need you to quote rates, but give us a sort of a.
So we basically have this sliding scale on refis. When we're looking at our rate chart, you know, I'm just going to throw a rate out, but let's just say, you know, you're going to do a refi and it's from 200,000 to let's just say 400,000. It's $350. That's the sliding rate. So we do a sliding rate, and it stays the same for a large quantity of an amount. And then it jumps again to, let's say, 425.
Well,
so it's quite low.
That's very low. I mean, I know that on refis, it's different with purchases, right? Purchases is based more on the purchase price rather than.
Yeah, that's different. Yeah,
right.
That's different. But on refis, we're very, very competitive. Okay, so now I just found a rate chart so I can give you an example. But
okay, great.
They jump and they stay at 400,000 for a tremendous amount of time, and then they jump up to 500, and they stay at that for a tremendous amount, and then they jump up to 625, and they stay at that amount. So you see, they're staying at the same amount for a very, very long time.
And that basically is dictating what you're going to pay for each tier.
For each tier, yeah. And we started that a while ago. So we're tiering up. So it used to be that we stayed at one price. You know, if it was this one, you were at this price, and we jumped with every single price. But we don't do that anymore now.
Right. Tell us what some of the.
It's very inexpensive to do a refi.
Very inexpensive, and I'm sure that the competition is fierce to get these done. What are some of the problems that you have when you do a refi from a title perspective? When the customer is looking, obviously, for the lowest rate, what is the liability on you as the person giving the insurance?
The one I see, which you're probably seeing, is that a lot of times they can't find the past lender. They've disappeared.
Right.
So they're trying to pay off a loan, and the lender that they're trying to pay off mostly on a second, that lender's disappeared. And we're trying to get a demand.
Right.
To find the lender to pay off because it's disappeared. So that becomes a big problem.
Oh yeah,
now we're trying to find a lender that's disappeared off the face of the earth. So that can become a real hindrance in closing a transaction.
Hey Sharon, we're up against a clock here. Could you shout out your phone number for somebody who's looking for a terrific title agent here?
818-402-5558.
Excellent. Hey, thanks very much for coming on. I really appreciate it.
You're welcome.
Thank you very much. This is Sharon Roos from Lawyer's Title. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to the Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening, for tuning in each and every week. We bring you interesting information about real estate, about mortgages, certainly about mortgages. The Mortgage Voice, that's the name of the show. By the way, you want to see that show? Go to YouTube, Jeff Barton, the Mortgage Voice. You can hear the show, 5 radio stations, 3 different states from Albuquerque to Las Vegas in Southern California, as well as up in the Lake Tahoe area. We're broadcast Saturday and Sunday. When you're driving around, you're going to the hardware. Well, I don't know if you're going to the hardware store today, but at some time in the future, you will want to know what's going on for mortgages when you're doing those house chores, and we're here for you. We've certainly been doing this show now, I don't know, 6 years, maybe longer, bringing people information that's not easily gotten unless you know where to go. It's easy enough this way. Either turn on the radio or go to YouTube or listen to our podcasts, and we're on the Big 8 podcast. Darryl, you have a list of those for me?
I do, Jeff.
Please?
It's Apple
Thank you.
Podcast, Google Music Play, Spotify, Spreaker, Stitcher, iHeartMedia, Radio.com, and YouTube.
Excellent. Now, I have a special guest, been on the show before. She's an author as well as a terrific, I guess, educator. Educator would be the way I'd also describe you. Is that right, Jacqueline?
Yeah, I guess so. Yeah, we're educator. Sounds great. I love that new title.
It's a good, okay, great. It's Jacqueline T.D. Wynn, and she's written a couple of great books. The first one she's been on before and talked about true legacy wealth, creating generational wealth through real estate investing. And her newest book is Real Estate Investing for Women. Again, welcome. Jacqueline, thanks very much for coming on.
Thank you very much for having me.
Okay. Tell us in a quick synopsis about real estate investing for women. And first of all, the need for addressing that subgroup of people who invest. Why did you see that as a need? And describe a little bit about the book.
Well, it's for us, it's actually an anthology. So it's a few women authors and also some men, and it's just focused on helping women invest because as women, we like to do things blissfully, that it's happiness and keeps us in balance. And so this book is really about real estate investing blissfully. So some of the chapters is about mindset and heartfelt wealth building, investing in capital blissfully, investing strategy to build wealth blissfully. So that's what we concentrate on. It's also the mind, feeling good when you're investing.
Okay, I'm going to ask you a question.
Okay.
You're going to, let's say I'm a person who wanted to invest in a rental property. So when you're dealing with both the calculation to do that, and then once you own the property, I guess the maintenance of the property, how do you rectify that with blissful investing? How do you bridge that particular, I guess, juxtaposition?
Well, we as women, we use I think we're very in tune to our intuition, and there's a femininity about that. And so the book, also talks about bringing that in, using your feminine strength, your intuition. And so when you're, say, dealing with property management and things like that, we're helping women use their right brain and their left brain kind of together. Does that answer your question?
Yes, it does. Specifically, I guess, because I'm not a woman, obviously. I have frustrations when I deal with things like, the sink's clogged, or I got to go out and repaint, or there's some issue with the chimney. So I don't necessarily blend the two together. One is a problem, the other one is I don't think about it. But you're saying there is a different way to do it, obviously, with the knowledge that you gain from the book.
Yeah, there's the problem, and then there's how you react to the problem, how you respond to the problem, and how you handle the problem, right? And
right.
see different people handle it differently. Some people can just go out of control, and somehow others can hold their composure and maybe still find some humor in it, and make something rough seem like, like, hey, we're just going to get through it. And I think that's what is a part of, what we wanted for this book, the women and the authors in this book and I, is about how to look at any problem, a clogged sink or tenants not paying rent, in a way where it doesn't jar us inside, doesn't stress us out, and we want to stay in that blissful state. That's where we feel as moms and as women, we thrive in.
Well, that makes a lot of sense. I understand, and I'm an older person, so having very strict defined roles in my mind is probably how I would look at a problem. Do you see that most people who are either learning from the book or reading the book are younger, older, or are they just any person who would look to try to gain some insight as to different ways to do real estate investing?
You know what? We have people of all ages. I mean, Lisa Gibbons, I don't know if you know her, she was one of the hosts on Entertainment Tonight. She's one of the authors in the book.
I know her.
And, she talks about finding success through optimism and, being good to others and how it translates to creating wealth. And so I think this book kind of transcends age, because I have clients who are in their 20s, mid-20s, late 20s, who are thinking about, they're not starting a family. So they're like, well, I don't have children. So how do I blissfully invest in real estate now if I have a little extra income? And then I have people who are in their 40s and 50s, and their children are now heading to college, or maybe even, are out of college and not in the home, and they're like, okay, now I want something else to concentrate on that will make me happy and satisfy. And so how real estate is a great way, because it still gives me my freedom.
No, I think all of those are excellent points. Do you also deal with flips? Do you deal with fixer-uppers? Do you deal with buy and hold strategies? Or is this mostly just your approach to doing all these?
This one is mostly to the approach to doing all this, and then my second book, the Creating Wealth Through Real Estate Investing, True Legacy Wealth, that's the one where we actually show people our program, where they can contact us, and then we can actually help them with the implementation of finding them properties, and obviously getting them through escrow and looking at all of that stuff.
Now, obviously, we're in a very hot real estate market in most parts of the country. Where are you seeing some opportunities, and how do you help people to realize opportunity when they may not see it for themselves?
Well, I think when it comes to real estate investing, there's a lot of algorithm and metrics, right? I think you know this, to go with it.
Right.
You got to look at, it's not just the price or just location. We have to look at income rate and population growth and what businesses are going in there, what businesses are leaving. And so those are things that, our team we have our turnkey program. So that's what our team looks at. And then we can in turn teach our clients what we're looking for, so they can look for it also if they have the time, or if they just want us to do it, then we just have those properties and they can just throw their money in and go on their vacation.
Well, both sound pretty interesting, actually. How do people get involved? How do they contact you? Could you give out that information?
Yeah, they can go to truelegacywealth.com. That's our website.
Right.
And book an appointment. There's a calendar there. They can book an appointment, and we can talk to them.
Okay, we have about 30 seconds left. Tell us, and tell the people, what's the biggest impediment to getting someone to make that first step?
They got to get out of their own way. It's all in your head. Feeling that you are worth it, that you can do it. It's a matter of just taking that step forward and not just putting it on your list to do for next year and next year and next year.
That's great advice. I think doing it is, as Nike says, you just do it. And I always thought that was a terrific way to look at life. Jacqueline, thank you very much for coming on the show once again. I want to have you back, see how the book's going, and see how your investment group is going also. Thanks very much.
Oh, thank you so much, Jeff.
Okay, thank you. That's Jacqueline T.D. Huynh. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in and listening to us each and every week. The information you get here is timely. Some of it is timeless. Some of it has to do with, just how do you get a mortgage? What do you have to do? Who do you interview? What are the best prices? All these are basic questions, but we do get into some nuance, and we do try to bring some levity as well as entertainment to the show. And again, thanks very much for listening. We're on 5 radio stations, 3 different states. We're on YouTube, Jeff Barton, the Mortgage Voice. We're on the Big 8 podcasts. So if you want to see and find us, and you do, please click that you like it or that you want more information. More people that do that, more people the show gets to, and really the information is needed out there in the marketplace, and your help is greatly appreciated. Today, one more interview for us, and bring a friend of mine as well as a terrific person in the marketing and advertising area, publicity area, is Priscilla Vizentine, and she's been on the show before. And what is it, the Vizentine Marketing Group? What is the name of your company, Priscilla?
I have 2 actually, but let's go with Byzantine and Ryan Public Relations.
Okay, excellent. And I do appreciate it. Obviously, there is a difference. And for those people who don't know the difference, listen up and you might be able to gain some information. Okay, I brought you on, wanted to know a little bit more about what's going on in marketing today in this incredibly intense COVID situation that seems to be getting worse. How does a company who wants to stay, in front of people, how do they do that now when they don't have walk-ins, they don't have, traditional way by which you'd advertise
Sure.
to get your...
No, really good questions. And I think we see evidence all around us of businesses pivoting so that they can still compete, they can still stay in business. Obviously, I'm in the Midwest. We are not in a lockdown like some of you folks in LA and other areas. But for instance, where I live, restaurants have certainly accommodated by hoisting outdoor tents with heaters, or they're at half capacity or 1/4 of capacity. So when you walk in a restaurant, the tables are spaced not only so far apart, but 3/4 of them are not serviceable. They have chairs on top of them. You can't even get near them. So that's one way restaurants have pivoted. Also, many are offering carryout, which they didn't before this. They have curbside pickup. That's another reason. Another way, one of my big client bases is retail. And now so many stores, of course, there's always the online option, and I'm aware of that. I work mostly with brick and mortar, which is actually seeing a bit of a resurgence, believe it or not, because people like to touch and feel and try things on.
Sure.
But so many more brick and mortar are offering order it online, give us a call, order it, call us when you get here. We will run your package out to your car.
Right.
So that's something that we have not seen before.
No, not at all. I think a lot of that has to do with just trying to, I guess, stay in business. And one of the things that I think the customer has felt is somewhat empowered, knowing that they're really helping businesses stay in business by shopping anyway, and the business is showing their, I guess, gratitude by doing things like running out to your car with, whatever your product is that you purchased. It's an interesting dynamic to me.
Another timely pivot as I'm speaking is, I don't know your kids, I know your kids, Jeff, they're a little bit old to visit Santa, but Santa has totally changed how he's marketing his photos and how he's visiting with children during COVID. There are Santas in giant plastic bubbles. So, remember Bubble Boy? Now we have Bubble Santa.
I love Bubble Santa.
Part and wearing shields. And there's also virtual Santa, where you can go online and arrange different price packages for a private virtual story time with Santa, a private virtual family meeting with Santa. So that's just another way, that's a seasonal way that businesses has pivoted in this
Now,
time. Yeah.
in newspapers and handouts, things that people would get at either the supermarket or malls or stores that they don't really, they do a lot more online. So how is that particular bit of advertising that had been done either through a coupon that you pick up or read in a newspaper? How is all that working now that most people probably aren't buying from the newsstand or picking up the
Sure.
advertising from the supermarket?
The magic button right now is a QR code. So think about when you go to restaurants, or if you go to a store or a business, and you open your phone, your camera app on your phone,
Yep.
click the QR code, then all of a sudden on your phone is the menu. On your phone is the weekly shopper from your supermarket. So the QR codes are the new way of communicating. I think not just during vid, or it's just in this digital age.
I see. So for those that don't know what a QR code is, and anybody over a certain age probably is asking, what the heck is that? To explain that for them, please.
I certainly will. I'm sure you have all seen it. It's a block. It's a black and white block that'll be on a website, as I mentioned, on a store window, at a restaurant tabletop. It's a bunch of little black and white squares. And
Yep.
I think the QR, and someone more technical will know it, I think it's quick react code. I think it's
Okay.
quick react or quick reach. That's what the QR part stands for. So
Okay.
it's a code that when you open it in your camera app, it's a complete flyer. It's complete information. It's almost when you're online, you get a digital link. Well, most folks know what that is. With the QR
Mhm.
code, you access it by your camera app, and there on your screen is everything you need to know about that particular business, about sales that week, about menu items, special offers, everything you need to know.
Videos, short videos. Are you advising any of your clients to get into either the social media world through that medium, or are using any of the short kind of things you can do on your phone to help push product or service?
Yeah, video speaks 1,000 words, as you can imagine. A picture used to mean 1,000 words. A video might mean 10,000 words. So short
Okay.
videos, but they have to be really engaging. You don't
Right.
want a video of just a product. They have to have action. They have to have movement. So videos are definitely a way to go, but I would keep them, 30 seconds max. 15 may be better. So you have to be pretty smart and pretty savvy to get your message out visually, and maybe there is no voiceover. Maybe it is just visual in 15 seconds. There's an art to it, but it works.
Okay, that's good, interesting information, because I know that there's a lot of, I guess, upcoming, the things that will be upcoming next year when, let's say, COVID is much more under control, 3 to 5 months from now, people wanting to advertise their outdoor or live events in the future, or in the moment that they're, wanting you to see it. That's important, I guess, for many different businesses that need to really re-engage people to come back to the store.
Exactly. People have to, first of all, they have to feel secure coming back. They have
Right.
to, they have to be told quite maybe several times and in very clear language what that store, what that business, what that stadium, for instance, what that concert venue is doing to keep them safe. Are they deep cleaning every night when they're closed? Do they have sanitizing stations throughout their venue? Are they taking temperature checks? All the different things that we are doing and should be doing need to be very clearly communicated and very visible once you step foot into that store, that venue, that stadium.
And do you think this is going to affect long-term trend in how people shop, or is it just this snippet of time? Those people that were really affected, they might change their behavior, but most people won't.
I'm not a prognosticator. I wish I were,
Right.
but I hope it doesn't, because, and here's why. And this is just my personal opinion, but I've been in the business for a long time.
Right.
People are suffering from isolation right now. People need people contact. I happen to be one of those people. So
Right.
I can't wait to go back to the store. I can't wait to go to a movie theater. That's when I never
Right.
knew I'd miss it so much, but I miss the movies, So
Yeah, me
in terms
too.
of shopping, I think people may return to lifestyle centers. They may return to Main Street. They may return to malls, just to engage with their fellow human beings, just to be part of a community once again, which I think we're all missing so much.
I totally agree. Listen, we're up against the clock. Could you tell people how to get in touch with you and your company if they would need somebody to use?
You bet. I would be happy to. It's Visentine and Ryan. That's V like Victor, ISINTINE, and Ryan.com. Or I'd be happy to answer any questions. I'm at 314-422-5646.
Priscilla, thank you very much for coming on, enlightening us with what's going on in this particular part of the world. And sooner the better we get back to some other thing, whatever that's going to be, the better for me too. I appreciate you coming on.
The better for all of us. Take care, everybody, and happy holidays.
Happy holidays to you too. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Okay, hi everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in each and every week. We are on here and really glad to see you. We're providing some information to people about mortgages, about real estate, and we've been doing it for 6 or 7 years now. Hundreds of programs that you want to see from our past, which can help educate you. You can go to YouTube. Go to YouTube, Jeff Barton, the Mortgage Voice. You can see the program. We've also got this new thing we've been doing the last 3 or 4 months during COVID, maybe a bit longer. It's called the Mortgage Minute. It's on LinkedIn and Facebook, as well as Instagram and on Twitter. And Jeff Barton is my handle on Twitter. It's at Jeff6493. But regardless, YouTube has most of it. Facebook and YouTube and LinkedIn, all of these things will help get you educated as to what's going on in the mortgage market. We're also on the Big 8 podcasts if you want to see us there. Daryl, do you have those Big 8 for us?
Oh, Jeff, I certainly do. It's Apple
Excellent.
Podcast, Google Music Play, Spotify, Spreaker, Stitcher, iHeartMedia, Radio.com, and YouTube.
Excellent. Thank you very much. We broadcast our program each Saturday and Sunday, and sometimes during the week, 5 stations, 3 different states, Albuquerque to Las Vegas, the Inland Empire up to Lake Tahoe. And those stations have been great exposure for us, the program, but most importantly, education for you, the borrower. I brought Nina Penny on today from Malibu Funding to talk about the reverse mortgage, how it is, how it has come to be, and how it can help you in some of the maybe cash issues, cash flow issues, if you're 62 and above. Nina, first off, how are you?
Doing great, Jeff. How are you?
You know, I said we were talking about I'm tired, and we're tired as an industry because we've been busy. We hit the ground running during COVID, and we haven't really stopped. And I guess that's a good thing. But at the same time, I know the industry is tired. I know people who are mortgage originators are tired, but there's many people that need help, and we're still there for them. How are you doing? How's your business?
Business is really good. Just, plugging away, trying to keep up, staying on top of everything, and it's, you can't let your service, go down. So
I agree. Yeah.
Get more rest.
Yeah, I agree with that. Unfortunately, life intrudes. Now, I know many people. I know teachers. I know EMTs. I know police officers. I know people who work 9 to 5 office, and I certainly know those who are out there who have lost jobs. There are many reasons to need a reverse mortgage. If you're a certain age, this is a great alternative to some of the other mortgages that are out there. First off, let's talk about what are the qualifications that you need to have in order to get a reverse mortgage, and what is a reverse mortgage?
A reverse mortgage, I guess quite simply, Jeff, it's basically an FHA loan. But you're not obligated to make payments on. You can if you want, but you're not obligated to do so. That's all it is.
Right. So, and they call this reverse, and they call other loans forward, right? So this isn't such a weird term. It's just instead of paying on a monthly amortized mortgage schedule, you have, as you say, options, right?
Yeah. So what basically happens is that, at least one of the applicants has to be 62. We're going to base the numbers of eligibility off of the younger person to come up with the amount of money that they'll have access to. And how they take that money is really up to them. And the amount of money that is borrowed from the reverse mortgage will have interest compounding on it until the day that they pay it off or make a payment on it.
Okay, now, one of the things I like about the reverse mortgage, especially in a time like now when many people have lost their job, that it's not income driven.
Right.
Speak to that. Why is it?
We work off of residual income. So we do have qualifications, income qualifications, but
Okay.
it's nowhere near what it would be like to do a conventional loan.
Right. Aren't you looking for things like the ability to pay taxes or the ability to pay other smaller items than necessarily paying down the principal amount of the mortgage?
Yes. What we do is we basically, to wrap it up in a really quick thing, we take the monthly income, we back up minimum monthly payments, we also back out what the taxes and insurance would be on a monthly basis, and after that, you have to have approximately, for one person, $599, and if it's two people, $998 left over. So it's pretty, lenient.
Yeah, I think when we're talking about a time period right now, COVID, right? What's happening for the last, I guess, since March 15th. A lot of people lost their job, 11.5 million people still out of work, according to, what some experts say, but others say closer to 20 million because of the people who have stopped working. Those people who are out of work, looking for a solution, is the reverse mortgage something that they should think about?
Absolutely. I have a lot of clients, that are hairdressers, for instance. They were getting Social Security, and now they're no longer working in their profession, so they just have a great reduction of income, just collecting Social Security. So I have some clients that are taking out reverse mortgage only to help them through this time period until they can go back to work. So, what reverse mortgage gives you that option. It's your money. You can touch it any way you want. So they're going to take just enough to cover them for this time period and then, leave it alone.
Okay, now, are you recommending that they, once they get through this situation and they can go back to work, to get out of the reverse or to stay in it and just make the monthly payments?
You know what? In my philosophy, I work with a lot of financial advisors. You can use the reverse mortgage to help you through gaps in time. For instance, right now, if you're not working, you can use your reverse mortgage to help you through this time period. Then when you go back to work and if you get caught up, you know what? If you want to make payments to the reverse mortgage, you can, but you're not obligated to do that. You can leave that rest of the money that you did not touch in your reverse mortgage there in the line of credit, which has a very nice growth rate. And you can save that for another time period that you might need it in the future.
Now, you mentioned that FHA was the base of this loan. And I know FHA loans don't require the highest of credit scores. Is that also true with the reverse?
That we are not credit score driven. So that's a big benefit. We also have we have to go a lot by compensating factors. Let's say if I look at your credit and I see major issues from 2 years ago or 3 years ago, I might say to you, Jeff, I see in your credit something was going on. And you say, yeah, I was ill. I couldn't work. And the first thing I'm going to ask is, do you have documentation? And if we can provide documentation, if there's a reason why you fell behind, we can still move forward with the loan.
I see. Okay. Well, these are all really important. Other qualifications that we haven't touched on?
If you have a major charge-off or things like that, that is handled and addressed differently. But I
Okay.
just think that people think that a reverse mortgage is credit-driven or income-driven. It's really not. The guidelines are a lot less stringent than traditional loan. This is an FHA loan. The one thing I want to stress people, they say that it's expensive. You're going to keep the loan for a long time, but it's also a government-backed loan. So anytime you take out a veterans loan, you're going to have the upfront funding fee.
Right.
It could be as much as 3.6%. If you take out a USDA loan, I think that's 1.75% in an upfront fee. A traditional FHA loan is 1.75 in mortgage insurance. It's really no different for a reverse, which is 2% of the appraised value.
I see. Excellent. I'm Jeff Barton, your voice in the mortgage industry. With me is Nina Penny from Malibu Funding on reverse mortgages. Thanks very much for listening. Thanks for tuning in this week as well as every week. I'm Jeff Barton, your voice in the mortgage industry, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.